Welcome everyone to tonight's Hookup with Real Estate Masterclass. We're super excited to have our special guest, Cecilia Cossio, and we'll introduce her in a second. But first, Ken, will you read the disclaimer?
We appreciate you attending the Hookup with Real Estate Masterclass. We are not financial advisors. The content we provide is strictly for educational purposes and not intended as legal, financial, tax, or investment advice. Nor is it a solicitation for funds. Remember, participation in this program is at your own discretion. Real estate markets are subject to change and can be dynamic. Hook Up with Real Estate and its representatives are not liable for any outcomes resulting from the information provided or engagements with third-party providers. Seek professional advice before making any real estate or investment decisions. By attending, you consent to this event being recorded and understand that internet security is not absolute.
Thank you. All right. Our mission is to empower aspiring and early real estate investors with exceptional education, invaluable skills, and genuine opportunities to invest in real estate while sharing strategies that guide them toward real estate success and away from costly beginner mistakes. And you can read about our costly beginner mistakes in the book, Real Women in Real Estate, which Cecilia is also a part of. So you can get it on Amazon, or if you'd like a signed copy, I'm happy to send you one. But there's a lot of valuable, inspiring stories and strategies in this book. Also want to mention that Ken is a licensed realtor in New Jersey. He works with Weichert, and his website is here. He's also a real estate investor, tile contractor, and a veteran of the U.S. Navy. So that's helpful. We are powered by Legends Equity Group. Generally, they have a stages call on Monday at 7 p.m., which is free. However, it's on pause until the middle of March, since the founder is away. Legends also does some amazing self-development work and seminars, and they have one coming up in May on the 28th through the 30th. It's going to be in Salt Lake City. It's called Legends Breakthrough. And there's a tinyurl.com/hookup-breakthrough if you want to find out more. We also are supporters of Core Tax Deeds. They had a low investment crowd-funded tax deed program, but it's ending very quickly. But you can look it up, invest.coretaxdeeds.com. And for accredited investors, just on industrial flex, which is, big bays where companies can come park their equipment in, and some have little offices in there as well. So we do have some investments coming up for accredited investors, but we can talk offline. There are two ways to connect with us through our YouTube channel, which this replay will be there in about a week. And it's youtube.com/the @hookup with real estate. And we also have a Facebook groups page /hookup with real estate. And you can also take the next step to book a strategy call where we'll give you real guidance and talk about real strategies and real investment opportunities. And we have our calendar. We are a monthly masterclass. We're here in February. The red ones are the exceptions. Otherwise, we're on the fourth Wednesday of the month. So and Ken, will you read the quote of the day?
Excuse me. Only when your intent and actions are in alignment can you create the reality you desire. Dan Rockwell.
All right, excellent. So now we get to the good part. Yes, it is recording. Let me double check. I heard it say it was recording. Yeah. Okay, sorry. I'm going to introduce. Oh, whoa. What happened? our special guest, Cecilia Cossio. She's a real estate executive, investor, and founder of NexGen Legacy with decades in property management and asset management. She's known for her systems-driven leadership and heart for service. Cecilia also focuses on helping others step into ownership of their life, career, and financial future. She's a grandmother, a mother, and host of the Affordable Foundations podcast. Cecilia is passionate about building generational wealth and creating impact that extends far beyond business. And I'd be amiss again if I didn't mention that she's also the co-founder of the Real Women in Real Estate, co-author of Real Women in Real Estate book. A great collaboration of heartfelt stories and lessons on women who found their way into various aspects of real estate. So please help me welcome Cecilia as she shares her wisdom from friction to performance, aligning ownership and property management.
Thank you, thank you, thank you. I appreciate and am grateful for the opportunity to be here today. So, like she said, I have spent a lot of time in the multifamily industry. I started out on site and worked my way up from a leasing professional to a executive of a management company. I was a president of a multifamily management company and to owner of multifamily. I'm in five different ownership groups. I have little over 1,000 units. My experience in operations is 10,000 plus units, and I have gone from W-2 to consulting and have really enjoyed just empowering others to bridge the gap between ownership and property management, because without that alignment, we have some serious problems. And so I have had the blessing of being tasked with that responsibility on so many levels, aside from my own um, deals that I'm an asset manager on. So thank you guys for having me here today. And for those of you that have joined us or are listening to this. And like Donna said, I do have a podcast named Affordable Foundations. I'm very passionate about helping others step into their own wishes, desires, goals, and how to make that happen for themselves. So when you go from on-site being a leasing professional to owning, um, you know, it's a very long time frame, but you learn a lot of do's and don'ts, and that is where I have understood the friction to performance. So what I'm going to do, I have a PowerPoint and I don't like doing death by PowerPoint. So at any time, if anybody has questions, just raise your hands and we can start getting into whatever dialogue you guys would like to discuss. The presentation is set up for about 35 minutes. Donna, it's typically what I'm able to do, but it can go longer than that and it can go shorter than that. So I'm just letting you guys know. Like you guys, I have the disclaimer that my attorney says I must read out loud, and it says this presentation and all its contexts are provided for educational, informational purposes only, is not intended as it should not be construed as financial, legal, tax, or investment advice. Always consult with a qualified attorney, CPA, financial advisor, or other appropriate professional for advice tailored to your specific situation. Reliance on this information in this presentation is solely at your own risk. I promise it sounds like I don't know what I'm doing, but I do. They just say we got to read this. I also have intellectual property rights that is outlined here. I do share my information. I part of my journey is to teach others. So I have a handout that I can email to everyone after this. Give us a few days and my VA will send it out. So My background again is 30 years in property and asset management, executive leadership. I'm an investor and operator and the founder of NexGen Legacy. And why this matters to investors. So, being in the industry, in the multifamily industry, and being on the property management side, I always taught my teams to take ownership and understanding on the other side the money that was invested into these properties. I will tell y'all, how many people here are owners or owners or investors into multifamily? So there's always a communication gap, and I say always, but there tends to be a communication gap in our industry between property management and ownership. And it's not for lack of trying on the property management side. It's because the property management teams are going 100 miles a minute. Unless they have some real set consistent systems that they follow, which I will go into throughout this PowerPoint. But why this matters to us as investors is because when there's not alignment between property management and ownership, you miss projections, there's unexplained variances, declining occupancy, rising expenses, and that results in the erosion of your NOI. And when NOI erodes, value erodes. So, and of course, there's a lot of different factors that could cause that. But when it comes to property and asset management, and what I'm talking about here are the controllables that the property and asset management teams have. This presentation is for aspiring.
There's at least one person that's not familiar with the term NOI, so would you mind?
I'm sorry, and you did, yes. Net operating income. So that is, to put it as simple as possible, it's your income that is produced on an asset from your rents and your other fees that is charged on a monthly basis, less your expenses. And that's your standard day-to-day operating expenses, such as payroll, maintenance expenses, taxes and insurance, admin, like the marketing. So that NOI number, then that net operating income is then used. Why it's so important is because that number is then used to create a value for the asset. So we can get into that. Like if you have any questions on that, I have a starter sheet that I can also send out.
Thank you.
You're welcome. Passive investors, it's important that passive investors understand what they're looking at when they receive a financial packet. So usually what I see teams do is send out a packet and it's just a newsletter. Well, if you're a passive investor, you just know whether you're receiving distributions or not. But if you pay attention to your financials that are typically sent with these newsletters, you will see that they typically have your income, your expenses, your net operating income, and then your other expenses that are non-standard operating expenses to include capital and other below the line numbers. And below the line just basically means it doesn't affect your net operating income. It affects your cash flow though. So everything affects cash flow. And then for early operators, and I have this on here, but really this is for all operators, not just early operators, because sometimes we have to be reminded, even myself, of the little things. I think when we see a lot of gaps and a lot of leaks is when we miss the details, because everybody's so focused on the big picture, which you have to be. But the reality of it is you have to get down to the foundation in order to create that stability for the remaining to be successful. So when you guys are dealing with your property management teams, the differences, the gaps are, again, when the owner is saying, well, the NOI, the net operating income, is slipping, and the property management team says, well, it's slipping because we don't have the money to turn the units. I don't know how many of you are dealing with occupancy issues at this time. But yeah, so I always say, um, you know, when there's an occupancy issue, you hear property management say, well, this is the market. As a president of a property management company, my response is we're better than the market. So that doesn't mean you're going to get that property to 98% when every expert around you is saying it's 90%. What it does mean is that you should be at 92%. So you should always, those property management companies that are the best of the best, motivate their team so much to be ahead of the market by at least 2%. And that really is just about teaching your teams to take ownership. So when somebody says, or when the owner says, why are expenses creeping up when occupancy is stable? You have property management that says, well, we were supposed to get our bonus. Well, I go back to the underwriting and say, was this bonus put into the underwriting? Because it should be in payroll. If not, then that's a friction that is caused by our ownership team. When you go out to the market to have the best of the best, you have to pay the best of the best. But I will tell you, and this is what I tell owners all the time, do not be penny wise, pound foolish. Because if I have a manager that is making $12,000 more a year than market, she's probably going to net me at least 60,000 more a year than market. So what I mean by that is you're going to pay $1,000 more a month than the property down the street, but you're going to be 2% higher in occupancy. So depending on the size of your property, you at least be a net $1,000 ahead. So when you think of it like that, you start understanding that when you pay your maintenance team to meet their skill set, and I want to be very clear on that. When you pay your maintenance team to meet their skill set, they are going to understand that they need to clean the outside systems before the summer kicks in. They are going to clean the inside systems when they go do their PMs. They're going to extend the life of the asset. They are going to make sure that those dumpsters are clean every morning before the traffic starts coming in. So do you see where the trade-offs are there? Because it really does matter. When you consider a maintenance guy that makes $1 more an hour, that's $2,080 a year, but they bring in $12,000 worth, and that's like a really low number. Curb appeal accounts for so much. I don't even think we really have a measurement for it, but I will tell you, would you stop at a property that had trash coming out of the woodwork? Like, no, you wouldn't. You would keep driving to the next one that looks cleaner. Also, properties that are not kept clean and maintained are they tend to attract crime as well. So you need to always keep that in mind as you're investing. I see that there is a question, Donna.
Yes, so you were talking about paying a property manager a little extra for performance, but how do you even evaluate if a property manager can deliver, depending on what they charge?
Well, you have your average salaries depending on the region. So when a property manager gives you, when I look at resumes for my clients or for my assets or for my property management company, I'm looking at tenure, I'm looking at asset class, I'm looking at verifiable history, I'm looking at my VPs and my regionals understand how to uh, interview them and the questions to ask. While we do have behavior-based questions, we ask technical questions. One of the gaps that I see out there when people are hiring is the verification from your previous employer. And while we're a very big industry, we're a very small industry. So you start seeing patterns of short-term employment. You start asking questions. You start asking the applicant what happened. You ask the applicant questions about their NOI. You ask the applicant questions on how they solve problems. And when you are in the industry or when you are interviewing people to that level, because our good managers are at a minimum of, and I mean a minimum of 65,000 a year, even on a small property. And that's not including bonus, and that is not including payroll burden. I saw a study today that I believe it was Yardi that sent it out, and payroll was average at between 1,900 and 2,100 a unit. I will tell you that 3 years ago, 4 years ago, we were at about 16 to 1,800 a unit. So that's a $300 a unit increase. We're not getting those kind of increases in rent per unit. So like you see where you have some of the challenges. So you really have to have skilled people on these teams and on these assets understand the impact that they make. So
Now, from an operator point of view, how as I, somebody who needs a property manager, could evaluate your company versus some other company and decide? Is that something you can comment on?
So you're saying you as an operator, so like myself as an operator, if I'm evaluating a property management company,
Right.
so I start looking at the turnaround of the property management company and I compare it to the average for our industry. So I have those data points. And yeah, so like it's because I know where to go and where to look that I'm able to kind of evaluate that. But you can, I mean, look, all the AI platforms, I assure you that you could pull that information from somewhere out there. I just happen to be part of the different organizations that provide us those data points. So I find out what the turnaround is. I find out the type of properties they have, the number of units that each regional has. I look at their benefits because people care about benefits. And I look at their culture and not just the culture that they're telling me when I speak to them. I go visit the properties because culture is spread throughout a company, even when your teams are out on sites. You should be able to go to these properties. And if there's consistency in what the leadership is pushing out, you will hear those things from the property team, even down to like, and I say down to the groundskeeper, but really the groundskeeper is like the executive of that property, because if that property is not clean, people are not going to come in.
Thank you. That was helpful.
You're welcome. So I say to you guys, as owners and operators, this is where the friction starts. The owners have an expectation. The property management team doesn't understand it or doesn't feel like they can meet it. And I tell people when they're doing their due diligence, make sure that you bring in the property management team that you're looking at, even if that's not who you end up with, because you have where you have the biggest leaks is when there's vision misalignment, operational misalignment, and then it causes financial misalignment. So when you have a operator and a property management team that is able to fully communicate, partner, trust each other in the process, trust each other to be able to speak candidly, respectfully, professionally, to find solutions, is when you have success. I have seen it in all different cycles. So fortunately for me, I was around in the 2006, 2007, 2008 cycle. And I was able to, at that time, I was working on affordable assets that required about 20 pages of application paperwork to qualify to live on your property. And the property next door was a conventional market property that only required one application and pay stubs. So if the rents were equal because of the market, our affordable rents were the same as the market rents. People didn't want to mess with 20 pieces of documentation. They wanted to just go do one application and move on. So we had to be very creative with marketing. And marketing then and marketing today is still foundational. It's still about understanding who your target market is. We just have it a lot easier today because of social media. We get to disperse that marketing at speeds that we didn't get to do before. Back then, and this really ages me, you would do a lot of foot marketing. Today, you do a lot of social media marketing. But even with social media marketing, your properties are part of a community. If you really want people to trust you, you better go meet them face to face. Go meet those doctors in those medical offices. Go meet those principals at those elementary schools, at the junior highs, at the high schools that sit around your properties. For property management teams, it is critical that they put themselves, inject themselves into the community. Know who your council person is. Know who your advocacy group is. And we say advocacy groups are a pain. Well, yes, they can be, but they are there to protect the resident rights. And if you're doing everything you need to do, even when you have a complicated advocacy group, you can still find that ground and make the progress you need to make to ensure that the community knows that you're running a legit business, that you do care about your residents, but it is a business. We are not a nonprofit, not most of us, right? Most of us do this for profit. And when you do have a nonprofit, then you change the dynamics a little bit and you can run the financials a little differently. Well, you have that's a different business plan. So I say all that to say that when you have a property management company that is top notch, they're going to use social media to expedite marketing, but they're going to understand the importance of creating those relationships in the community, knowing who your community officer is, knowing the churches, because who helps the residents on these properties, listen, guys, whether it's a Class A property, because I am an owner in a Class A property and I'm an owner in a C value add property. You all have all the residents, I say all the residents, but it doesn't matter what class property it is. You are going to have residents that have financial issues. These churches, these different nonprofits are the ones that help them with rent. So when your property management team injects themselves into the community, people know them, people know that they care. And when people know that you care, people will come live at your property. People will refer you. People will remember your name. You know, it's how you treat people, how you are remembered. It's not by what we say, it's by what we do. So, that's a big thing that we would teach our team members. So, does anybody have any questions on these misalignments? I'm kind of going through them without naming them directly, but
examples of each, like where there was a misalignment that you could state for a vision, an operation, a financial?
Well, I'm going to tell you um, different priorities. I'll give an example of each one. So different priorities. When you have an ownership group that is running a rehab and you have a property management team that is trying to get occupancy. So you have this vision of like, we're going to get through this rehab, we're going to charge $200 more, we're going to move these people in, right? So the property management team's vision is we're going to move people in, we're going to move people in, like we got to move quickly. You've got a complete disconnect there on how that works. So from a property management side, you have to have a game plan when you take over a property and say, okay, the rehab is going to be these 10 units. We're going to rehab these other 10, we're going to do quick turns because the team needs people moving in. The biggest mistake new owners make or new operators make is they let vacancies sit for the sake of turning units without the proper turn teams, without the ability to turn them as quickly as a property management team can rent them. I also tell people some rent is better than zero rent, right? Because we get tied into, well, our business plan says this is what we have to have. Please have somebody look at your renewal capture increases and your first year rental increases based on your rehab. Make sure that somebody with experience understands the turn time it takes to do a rehab, the supplies issue on a regular basis, not during COVID or during times like this where sometimes there's supply issues because things are held up for whatever reason. And that right there is where it falls into the operational misalignment because it's inconsistent processes. The successful property management companies follow processes that are consistent. That doesn't mean that they can't pivot quickly, okay? Because good ones can pivot quickly, but they still have a process they follow. So if they have to turn right real quick, they can turn right, but when they turn right, then they understand that this is a process that they need to realign themselves with. And that's how they create success. And then financial misalignment is when your property management team and there's a lot of things that I could go into there. I'm just going to keep it really simple for the sake of income. When you guys are looking at income, understand that when you are on an accrual base, when your people move out and they owe you money, that bad debt has to go somewhere. So you have your income that is billed and somebody moves out owing us $10,000. When that gets written off to get it off the delinquency report, it's got to go somewhere. And it goes back into that income line as a chargeback or a debit to the line. And so it reduces that, $20,000 income that you had to $10,000. And if that is not fully understood, then that really causes this financial misalignment. And that's just one example. The other is not having a clear understanding of what the per unit expenses are and not having the proper contracts. You sign a contract because somebody's giving you $50,000 for the year to sign cable or sign electric or whatever. Please understand everything behind that contract if you're not able to meet the obligations of it, because it can be very costly. Make sure that whoever is in charge of that is very has the experience to really comb through them, because contracts hide information that costs us a lot of money, not just on the ownership side, but on the property management side. Because in property management, what we collect, we charge a fee against. So if we don't collect it, then we can't charge a fee against it. So our goal is always to collect as much money as possible.
Hey, one question about what you said earlier. Getting something rented quickly. Like if you have, let's say, 30 units and, they're rented for $1,000 a month each, but you have, let's say, three vacancies and you decide to offer some kind of incentives. Did the other tenants catch wind of that? If you happen to lower the rent, is there some?
Yeah, absolutely they do. And it's about training your teams on what to say when that happens, because everybody, when somebody moves in, especially during these times, really any time, like even in the greatest times that we have had, there's always an incentive to get people to move in. And I've always trained my teams just to go back and say, okay, well, what special did you move into? Because you probably had a better special than that. And if you didn't, then when your lease comes up, we can see where we're at. But as residents know what is happening in the market, they absolutely know. So you have to decide, again, being the best of the best, being the best on the block, providing the best customer service, understanding who your residents are, being relational before transactional. All of that matters in these renewals and these move-ins and these negotiations for new leases. So, but yes, they absolutely talk, and you have to be creative. What you have to understand and what your teams have to understand is that they have to follow fair housing policies. And what you do for one, you have to do for all. And you have to be very consistent in your practices. So, again, that doesn't mean that if I have a special today that I'm giving away 2 months free. Next month, if I do a different special, that I'm going to be in violation of fair housing. Being in violation of fair housing means that I'm treating people differently based on one of the 7 protected classes. And I'm treating them differently because they fall into one of those 7 protected classes, not because today I have 20 vacant units, where next month I may only have 5 vacant units. So I can document, show why my specials are different. So
Excellent point. Thank you for that.
good. Okay. So a property management company is not a vendor. Okay. So when one of the mistakes that I have seen coming into the ownership side is when we treat a property management company like a vendor and not a partner. And what I mean by partner is respecting their skill set, their knowledge, their experience. I I really love it when I see my clients or even our teams where we're able to share the knowledge back and forth. Because when you're talking to a manager or a regional and they start understanding that business plan and they teach them what that cap rate means, you're teaching them to think like an owner. And while the property management company is your partner, the teams that are on site are the ones that are responsible for running a multi-million-dollar business. Your multi-million-dollar business. I'm going to tell y'all, many of these managers don't have a finance degree, don't have a business degree, but they run these businesses with absolute, and this may scare some people, but it's gut. It's they understand. And when I see those people, I hire them and then I start training them at a whole different level, at a whole deeper level, because I want them to understand that underwriting. I want them to understand how they move from that, how we move from underwriting to acquisition to exit, or to stabilization to exit. And if the property is already stabilized, then I teach them how to go from the stabilization they're at to tweaking it just a little bit more, and how that $10 difference in ordering maintenance supplies that cost us $1 less a piece over the year saves us, $1,000. When you do that over 100 items, how much more value do you create? But it's because you're teaching them to pay attention to the little things. You're teaching them to think like owners. So don't don't treat them like a vendor, treat them like a partner, because they're there to protect our assets, and they really spend a lot of time on those properties. If you have a good property management company, you don't typically get calls about what is happening on these properties because they're taking care of it. What you get is an incident report if it calls for one. You get an incident report with what happened, how it was resolved, how the follow-up is going to be done, pictures, videos, whatever it is. And that's the end of it. Like, they take care of things. That is when you know you have somebody who's working through systems and processes. So, any questions?
I don't see any right now, but that's a good point as well, that we're running multi-million dollar businesses, and we should really
Yeah.
consider all our partners. And
Yeah. So my first pillar is a foundation, right? And this is what I was saying earlier, because before anything happens, you really have to be able to define your strategy. You have to be able to understand what that underwriting was, what that capital plan is. You have to understand who your resident base is. Your teams have to understand what success looks like and what success doesn't look like, and be very clear what that means. When there are shifts in the market, we as owners have to be able to make that pivot as well and redefine what those metrics are. And it that just comes from having strong operations background on how quickly you can do that. And when you see the impact to the property management side, and how their reactions to shifts impact the properties. So it's not, most of the time, I don't want to say all the time, but most of the time, it's not for lack of effort, it's for lack of alignment. So when you create a strong foundation, it it allows you to have future success and minimize your losses. So it goes back to occupancy targets, your expense thresholds, like I was saying earlier, understanding that what the cost per unit is, on as an industry, what this looks like and how we measure against it as an asset, and where can we make some shifts. Can we cut back on the $10 batteries or $10 smoke alarms, or do we have to buy the $12 smoke alarms because we have gas connected to a building? See, there's new laws that go in place, and if you don't know those and you see the expense, the property management company doesn't know to explain it. They just know they had to be in compliance. And then we start seeing shifts. So then you're like, okay, so what else can we do to cut back? But it takes an asset management team that really digs into the weeds of these things and understands the cost per unit. Understanding cost per unit is vital. Saying, well, we should only be at 50% of income. Our expenses shouldn't be more than 50% of income. That is not realistic. I tell people I always am the pessimist when it comes to financials and due diligence, because I'm going to tell you the worst case scenario, like, because I've seen it. When you see it enough, you know how to look for it. And look, our goal is to be the best of the best. I've been saying that, but I'm going to tell you what the worst case scenario can be. So I have a responsibility to do that. So,
what is your worst case scenario? You can share it here.
when the cap rate is, when you end up with a cap rate that is higher than what you went in with, and that takes away the value. When occupancy changes occur out in our market, I mean, like, that is a worst case scenario that is not controllable. Controllables are when a property manager steals $60,000 from you in 1 month, and somebody wasn't paying attention to the money that was going into the bank to what was being reported. So, like, it's really important that those things somebody's always got to be watching. From a property management side, my accountant, she had an eagle eye. So, like, every Monday we would go through, we would look at our reports, and every Friday we would go through and look at our income reports. Like, income is key. I tell my teams, occupancy cures all, economic pays the bills. So the money you collect is what's paying everything. Like, I can be 100% occupied and 90, percent not collected. That doesn't do me any good. So economic is what matters. I can be 80% occupied and 80% collected. I'd rather have that than 95% occupied and 75% collected, because at least I know I've got room to improve that income, because they're on their collection game. So it's understanding what that looks like.
Yeah. That's an interesting point, because I'm thinking of a current example where, let's just have a promise to pay, not by the due date, but, 2 weeks, 3 weeks later.
So promises to pay can be helpful, but they can also be hurtful. So what you want to do with promises to pay, first of all, when you put yourself in a promise to pay, you come to an agreement that you're not going to evict them. So you have to have a very robust training program on promises to pay. And follow-up is key. Consistency is key. This is not rocket science. I say that all the time. When you're consistent about your practices, people know you're going to knock on their door. You're going to evict them if you say you're going to evict them. You're going to be firm. You're going to be fair. You're going to take care of your properties. Promises to pay are not a horrible thing. But if you have a promise to pay every month, then maybe you need to figure out at renewal what you need to do with that resident. Maybe they need to move to a smaller unit. Maybe you need to do an on renewal. Maybe you need to increase their deposit, but that has to be written out in your rental criteria, just so you know. I say all this, but there's other parameters that you have to follow. It's just things that you have to know to look for, and processes you should be following. You don't have to follow anything, but you should be following to protect yourself and the asset. So they're helpful, but they can be hurtful. But if a manager is consistent and holding people to the promise to pay, the word gets around. Promise you. Yeah.
Great tip. Thank you.
Yeah. So, and this is where I see on the
No
foundation.
pun intended, right?
Yes, no pun intended. I think being in this business 30 years and coming in, 5 years ago as an investor, looking at the different investment groups, I had a gentleman that I had worked for a number of years and been responsible for millions of dollars of his assets, that says, Cecilia, I hear you. Just understand this is going to be difficult at times, because you know what to look for, you know what to ask for. And when you're working with somebody that's new, they don't really know. So you're going to be on, step 10 and somebody's still on step 1. And that's actually been more true than I really thought it was at that time. But it's also been part of my consulting, because it's allowed me to use that as my income, because people don't know what to ask. They don't know what to look for. They don't know when a property management company is blowing smoke. And I again go back to when our brokers send us, and nothing against brokers, they're there to sell the deal. Well, I'm there to figure out like how to get it at a number that makes sense, because the number they're giving me and the number that I know we can charge and the number, and not in all cases, but like these are things that I know what to look at because of the data points that I've been exposed to and the data points that I look at and the hands-on experience that I've had. It is part of what causes the friction out there between the property management companies and the owners, and it causes it. That's, I think, one of the biggest uh, disconnects between owners and property management companies is owners don't know what they don't know, and that works against them and for them. Works against both of them, sorry. Works against both the owners and it works against the property management companies, because property management companies, I've heard them blow smoke, and the owners have an expectation that's unrealistic. Your underwriting doesn't mean it's realistic. Like I have told people, no, I'm not taking on your property. Like, this is unrealistic. I can tell you what I can do with it. I can tell you how I'm going to minimize your losses, but I can't get it to where you think it's supposed to be. Like, it doesn't matter how good my team is. They cannot work that kind of magic. They can work a lot of magic, but not that kind of magic. So, it's
So you've turned down clients because of that?
I have, yes. Yeah. I don't you know, I do this stuff because I love it, and I take on challenges because I love to solve problems. Um, but I'm also a realist. Like, if I know, and I've taken on some stuff that I'm like, okay, like, here's the reality of where you're at. Here's what I'm going to try to do. Um, and I'll do everything I can to exceed that, but here's where I tell you that I can get it to. But you have to follow the process. You have to follow the systems, and you have to follow what we say needs to be done, unless you have unless you got something to show me that. And I'm a lifelong learner, so I'm always learning, right? So but it is, yes, I will tell somebody no. Like, if I'm not going to take your money if I can't really help you, I'm it wouldn't be right of me. So yeah. So pillar number 2, and I know we're running short on time. Pillar number 2, I've talked a lot about alignment. So again, these are the things that we've talked about is, you have to be aligned. People have to understand what the expectation is, what the reality is, and the roles and who's doing what. And if, I tell property management companies, you shouldn't buy anything that exceeds, $1,500. Well, carpet costs $1,500. So am I, as an owner, do I really want to approve a carpet every time there's one? Well, no, but what I do want to do as an owner is I want to say, you replace 5 carpets. We replace them with plank flooring, but you replace 5 floors. Where's the pictures to these floors? Because if they can show me pictures and they can consistently show me that the need for the expense was there, they build trust. So what I would do when I would do my variance, or when my regionals would do their variance reports, is they would attach pictures to those variance reports for those high capital expenses that either were not budgeted or that might have been budgeted, but they provided that trust factor between property management and ownership. So there shouldn't be a problem with them doing that. I know everybody's running like full speed, but as owners, that's our money. And property management, that's your credibility. So, figure out ways to build that trust and maintain that trust.
Well, we've
Here's
got
some stuff.
pictures from our property manager since we're out of state, and it's been very helpful to see some of the work that gets done.
Yes, absolutely. And here's some of the reporting alignments. When you have like monthly financials, your variance explanations that I was talking about for line items that are 5 to 10% or whatever is set between ownership and property management. It could be 10% and or $2,500 or $2,500. Like it's however you choose to set it up, or however the property management company says they're going to set up their reporting. KPI dashboards and leasing velocity. I love, and I say that sarcastically, I love to hear, well, that apartments.com brings us a lot of leads. I don't care about leads. I care about leases. So tell me how many leases it brought you. Like, you can get 100 leads and not get any leases. That's a problem. You can get 10 leads and 5 leases. That's a 50% capture ratio. To me, that works, right? So it's really understanding that when you're looking at those expense dollars, because those are expensive dollars that go out the door. Those different marketing platforms. And again,
Percentage, sorry, on leases. Wait, what is your question?
a good leasing, well, for marketing platforms, it really depends, because depending on how much you pay will depend on where you sit. But a closing ratio for a leasing office, for a leasing professional, the average is about 25 to 30%. So if you have somebody that's closing on 35% of the leases that walk, or the traffic that walks in the door, as long as they are properly documenting the traffic, then you have a good closing ratio for the market. And the communication structure is really just this, guys. When I was saying earlier, you're communicating, it's these monthly asset reviews, your quarterly strategy reviews, and the escalation path. So like the incident reports, when I said they would send us an incident report, this is the plan. Here's my VP would say, we had an incident that occurred. Of course, as a president of a company, if an incident occurred that involved somebody being hurt, I'm not talking about, water, overflow or anything. I'm talking about somebody being hurt on the property. Then I was definitely advised at that point, I would decide, who in the ownership group was going to get the call or the message. And typically this is what we have going on the property. We will provide you additional updates. The news is or is not there. Ownership teams are never named in any communication with the news. It's typically a management company handles it through their PR, and they teach their people to say, we are not the authorized spokesperson. We will take your phone number and give it to the proper person to contact you. Because that can get really dangerous. And our poor site team members, when there is a fatality on a property, they're scared. And it really looks bad on us when they're putting up their hand, like, to the cameras, right? There's so many things when you train them to use, the same thing, the same phrase over and over. This is private property. We need you to move to a public right of way for the current security and privacy of our residents. Like, you could say things that are not, that do not seem like you're, trying to defend the situation, but instead you're trying to protect everyone involved, because that is key. You are trying to protect the privacy of everyone involved. So, and execution. I mean, guys, we can have the foundation, we can have the alignment, we can talk about vision, but if we're not executing, then none of that matters. But when you execute properly, when you pivot, when you push things out, when you're putting in a new platform, because we are moving, we're saving $100 per unit on our property management software, and we pushed out the platform, but we didn't properly train our team members on this new platform. That's a lack of execution. Even though the platform was pushed out for everybody to use, if there is a big if there's a lack of understanding on how and I was one of those that made this mistake. I was constantly pushing out platforms. I raised my own hand there, because I took a company from complete manual um, systems to fully automated, or almost fully automated. And I was on my third platform when I was going out on site, and I was trying to listen to what the people were saying. And they're like, wait, we haven't even finished learning the second platform. We barely got through the first one, learned the second one, and you're already pushing out the third one. So understanding how that is going to be pushed out in each process is executed is really important to the success, and the the team really grabbing onto it and believing in it. Because if the team doesn't believe in what you're doing, they're not going to execute it. They're not going to execute the process. They're not going to execute the business plan. It hampers everything else because of that one little system, whether it's a platform change or a rental change or a process change. Make sure everybody understands what we're doing and why, so it can be properly executed. Does anybody have any questions? I think we're probably, are we at the hour mark?
Yeah, we still have about 24 minutes left, though.
Do we really? Okay.
So just a quick question. So are you using platforms like Buildium or AppFolio or Homegrown or?
Appfolio, most of my clients are larger portfolios. Like I was just with somebody who had well, they were 15,000 units, and they've been getting rid of some of their units. So I was acting in a fractional executive capacity for them. And so they were on one side and Yardi. I have another one who is on Appfolio. It's a smaller portfolio. Resman is another one that people use. So it's, you know, they they all are good platforms. It's all dependent on how it is utilized on site. Junk in, junk out. You have to know what your people on site are really doing in the system. So it takes, from an executive side, it takes, for me at least, I would make sure that my VPs and my regionals understood how to look at the back end of the information so we could fix the front end of the information. Because that front end data, if it is not accurate, it doesn't help us with our analysis. It actually provides us wrong information, and then we can't, as owners, we can't make real decisions, and decisions are made on incorrect data. So
I worked in IT for many years. Same story. Junk in, junk out.
yeah, it is and it's like that in every like industry. It's not, just specific to the apartment industry. I do some business consulting in a different industry, and I see the same thing. So yeah.
Do you do
So
leases for, I'm sorry, I didn't mean to interrupt.
no, go ahead.
Do you do leases for commercial properties?
I don't. My partner does. She does leases for commercial properties, and my other partner, I help him with his commercial properties, but I don't do the leases directly for those commercial properties. But if you have something, I definitely can help find some solutions.
Okay.
Yeah.
Okay,
Put her
I'm sorry, I just
contact
got a text.
information in
I
my
was distracted. All right.
That's
Donna,
all right.
say it again.
said Cecilia will put her contact information in just a little bit. in the chat.
Okay.
Yeah.
All right. Thank you.
You're welcome. So, revenue is key, right? So looking at the lead to lease, the tours per week. When I tell you guys tours per week or tours per day, it's important that we understand what those tours mean. Are we talking about in-person tours? Are we talking about virtual tours? Are we talking about website tours? And it used to be like people who came in the office, but that is not the case anymore. So really understanding what your marketing setup is and how that is transmitted in the marketing reports. So does a lead that is nurtured and applies but doesn't come in, is that considered a tour? Is that considered in the closing ratio? All of those things are something are things to consider. And I'll talk a little bit about daily pricing adjustments, because there are revenue management models out there that you can use, and they are good if the information that is used or put in by the site team or the corporate team member that's responsible for putting in the data that's required for these revenue models to work is updated. That is the best way, the quickest way to adjust rents. However, if it is not set up properly, sometimes that old school way is the best way. And that is really by looking at what you have available for today. Like, don't double check anything that doesn't sound right. Even people who do not have experience with multifamily, but you have experience with business, so you know how to look at a number and say that doesn't look right. You may not know why it doesn't look right, but you know it doesn't look right. Then you call somebody like me and I can start digging in and tell you why it doesn't look right. But those are the things that I tell people, because sometimes when you don't have the experience in these revenue pricing models, you think that the system is automatically updating that information. It is not. It still takes a back end person. Now, with AI functions that have started coming into play, there is some efficiencies that have gone into place, but it is still not the catch-all answer. So please understand that. And I use AI at all kinds of different levels. Like, I'm teaching people on site how to utilize AI to maximize their lead nurturing. So, and then I'm a board advisor on an AI product that I absolutely love, because we're seeing it create and nurture those leads 24/7. That's the key, 24/7. People want that immediate gratification. And look, we're like that too. We may be in bed and then we wake up and like we pick up our phone, right? And then we start looking at things. So that's what people do. Like, that's what our clients do. They start looking at stuff, and I really try not to do that, but I'm gonna tell you, I do that. And so, like, when somebody's getting immediate gratification, they're going to be responding to that contact first, to that reach out first. And then they remember the name. I had somebody who kept sending me messages, and because they sent me messages 3 times, I referred them to somebody else. I was just a shopper, but they kept sending me messages, and somebody asked me about a property in that area. I said, you know what? These people kept reaching out to me. Why don't you call them? And I told them I haven't, other than shopping them, I don't know anything. But I knew they must have had a system in place that allowed them to reach out to me consistently. And when you do things consistently on these properties, they work smoother. So, the hope is that marketing effort was done consistently. Their other operations are done consistently. Maintenance has a big impact on our expenses. Remember earlier when I said your maintenance guy is looking at the ACs and cleaning the ACs when they're doing their preventative maintenance? I said PMs, but preventative maintenance. It basically what you want to do, you want to have a schedule when they're going into these units to check the smoke alarms, to change out the AC filters, depending on what area you're in, what region you're in, the furnace, to check the furnace, to check for pipe leaks, to check for unauthorized gas, to check for sex traffickers. Because when you're doing preventative maintenance checks, these are the things that you should be looking for. As owners, we're responsible when we ignore red flags on our property. So the best time to come across those to check for organic growth. You hear that I didn't call it mold. I am not a tester. I can't say that it's mold. I say that it's organic growth because I'm not going to say something's mold if I don't know that it is. And I don't do those tests from Home Depot either. You have to bring me a certified tester out that's going to tell me that that's mold and that those levels exceed the safety numbers because again, in the air there's particles. So like these are all things that you train your team members to understand because then they start saying, "Oh my goodness, there's mold." Wait a minute. Don't say there's mold unless you know it's mold. It's organic growth. James, I think you have a question.
Yes, ma'am. Thank you.
You're welcome.
I missed part of your introduction. I'm a realtor in Columbia, South Carolina,
Mm-hmm.
and at some point I'm interested in doing some investing for myself. However, my brokerage at this moment, they have informed us that we can't, I guess, do property management. And I guess I asked other agents, and people tend to hoard information. And I like, what's the workaround of owning property and being a licensed agent?
It depends on your state rules, right? I think Texas is one of those. I'm in Texas. I have had
Okay,
properties. I actually had a property. I want to say it was Columbia, South Carolina, um, and I've had properties in New York, Tennessee, South Carolina, Florida, uh, Oklahoma. So it really is dependent on your state. So you have to see what the state laws are, what they are as far as it applies to realtors. I know in Texas, my one of my partners is a broker and she invests into properties and she manages her own properties. I am not a realtor. I don't have a realtor's license. I cannot
right.
go party manage, but what I can do
Mhm.
is use her broker's license with our business. She's got a small ownership piece of my management company and I can third
Right,
party manage with that. I can also own or operate my own properties. So, and I don't need a license for that because I am the owner. So, but that's in Texas. I don't know what South Carolina law
well,
is.
and I asked my broker directly, I said, look, I understand the state of South Carolina. You cannot manage property. What if I purchase, hypothetically speaking, I purchased something in California or Iowa, and she said, you can't manage property as long as I'm part of that brokerage.
Oh, okay. So that's different.
So
So, yeah, I think that has to do with what I'm hearing you say is it has to do
liability,
with brokerage.
yes, ma'am.
Yeah.
Liability. Because well, the thing is, there are other agents in Texas that I'm aware of who manage properties or invest in properties. So I guess my other question is just listening to you with this vast amount of information and knowledge, other than being thrown in the ocean and learning it on the fly, how did you learn what to do in a more structured way so you didn't get yourself in trouble with the state or the government?
I didn't tell y'all this. My story starts as a leasing professional, and I was going to school to be a part time teacher. My ex husband was stationed at Fort Hood. and I got a part-time job at a property as a leasing agent. I did not have a manager there, but the property was like 90% military. My ex-husband was military. One of the things that I've always known is read contracts, whatever it is, right? The owner was in Sherman, I was at Fort Hood. So I was 20 years old, 21 years old, I don't remember. I started reading the resident contract. Well, I lived across the street at the time and I had a contract. So I knew it was a Texas Apartment Association contract that I had read through. So I knew my rights as a resident. Then when I got the part-time job, this is going to really age me. We were receiving rent on a pegboard system. So I knew to make copies of the money orders or the checks because I didn't want to lose something. So some of this stuff is just done because you understand how to just set up systems, just instinctively do certain things to protect yourself when you're in these situations. And that really is key, is how do you minimize risk? You minimize risk by reading the contracts and understanding what the state law requires. What I did on that property is I read the contracts. I understood what habitability was. And I actually got us off the military blacklist that allowed military members to move on our property because they had started telling people they couldn't move there. And nobody knew that but me. And I was just, I was just doing what made sense to me because it was my job and nobody else was there. So you learn how to do this. I learned how to do it because I was thrown into it, but I understood that I needed to read the contracts and in my mind, minimize risk. I minimized risk. I might not have called it that at the time, but I did it by making copies of those checks and those money orders and made sure that they were placed in order. I made sure that those checks were placed on the accounting side was done on the pegboard system for each ledger. I wasn't an accountant, but I knew that they connected. So it's understanding, like taking that initiative and taking ownership of the situation. So that's really the best answer I can give you, but that is how I started doing this. And then I understood how important it was for me to read every piece of paper that crossed my desk. And I stayed, I'm a lifelong learner. I mean, literally, I was going to school to be a teacher when I got this part-time job. So like that kind of, I'm still a teacher, just in a different format now. So
Now,
yeah.
your contracts, are they drafted by an attorney or are they like state?
Well, anything that I always tell people, be part of the state association or the local apartment association. They have hired these high-end attorneys that are part of their committees, that are part of their associations. They have done all the hard work for us. They have made sure that the verbiage on the contracts are meeting the state requirements or your local association. Most of the time your local association will tell you what your county is requiring, but for the most part that really is just a lot of self-education. You got to get in there. When you're buying a property, you need to know how your property is zoned, where it sits, what it's considered. Like, is there been a CO on it? Has that CO changed names? Is there any city violations? All of those things are things to look at. But if you don't know, you don't know. And you go buy this property, and then here comes code enforcement with a 20-page city inspection, and you got $100,000 worth of expenses you got to do because your rails are too short, or nobody's told you that. It's not the seller's job to tell you. It's your job to know this in your due diligence. So
Thank you. It still
you're welcome.
sounds scary, but thank you.
It is. It is. I mean, you're dealing with millions of dollars when you buy these properties. So it's absolutely scary. And if you're taking other people's money, you better know what you're doing, and you better have people on your team that know what you're doing, because you have a great responsibility to ensure that you do everything in your power to protect it. Like
Right.
that, I treat that money like it's my grandchild's money. It's my grandma's money. It is because it's somebody's grandchild. It is somebody's grandmother. That money belongs to somebody, and they entrusted you with it. So you darn well better take good care of it. And that's bringing people on that understand how to do this stuff, or getting the education, paying for the education, investing into yourself so you understand what needs to be done. Uh,
Well, with that being said, when you say getting education and or inquiring information you need to be able to function legally, where would you recommend I start? I understand each state is different. They have different rules and counties. It varies from county to county, city to city. I get that. But as a general rule, where would I go to obtain just some information so I can have a base of what to do versus flying by the seat of my pants?
yeah. If you are a realtor, I would say you're starting at a good place. I don't, I would say a lot of our functions cross. Um, we have the same basis. Like we take care, if you're doing property management, you're taking care of residents. You have a responsibility for residents. But what
Right.
I say, it really depends on what direction you want to go. If you want to go into multifamily, then you go a different, you attend the association meetings. And there is, guys, I'm going to tell y'all, there is so much information on the internet for you to look at, that's free, that people just upload, like this right here. If you can walk away with a few nuggets from this, that's learning. But I have spent not only, 30 years of my career learning, I have spent like over 200,000 in education through the different things that I have done, between the masterminds, between education through different groups. Some of it has been good and some of it hasn't. Some of it has been money well spent and some of it hasn't. But I say that, but it has also taught me what not to do at different levels. So investing in yourself is really important. But start out with the free stuff. Go online and look at the people that Donna is associated with, and many of them have great platforms on YouTube aside from herself. Like most of the women in our book provide education in one form or another that you could learn from for free. So just keep an eye out for those things. So you're welcome. I'm going to just go through real quick, Donna, and talk about like the expense discipline is about efficiencies. And again, the last part is accountability, guys. We have to be accountable as owners and property management companies. As owners, we have to understand if our underwriting was bad to begin with, or if our underwriting had to pivot because cap rates, because interest, because over aggressive underwriting, we need to be accountable for that. Like we need to understand that that's on us. If we didn't put enough rehab money or enough reserves, that's on us. And from the property management side, when you're on these properties, take ownership of your role, from leasing to the executive teams. Like we can only blame owners for their part, but if we are doing everything that we control, from keeping the models clean on a daily basis to keeping the properties clean to doing callbacks, making sure that we're minimizing expenses that are within our control, then you have done everything you're responsible to do. But take ownership of that piece from the property management side. And again, this is much longer because we were supposed to be on for 45 minutes, but here's what I'm going to end this with. Investors don't just invest in assets, they invest in operators. So know your operators. know who's operating those deals. When I sold off my first 6 assets, and they weren't my assets directly. They belonged to the company I worked for, but I treated them like mine. And they trusted me to sell off more than $50 million worth of assets. They were in Florida. I was in Texas. And it was 6 assets that were distressed when I took over. And within 5 years, 6 years, we had a contract to sell them off. And we did. The person we sold them to then turned around and hired me to come back to Texas because I had moved with my company to stabilize them so they could get their permanent loans on them. So, like, it's all about the operations. You have a team, a property management team that takes ownership. That's a big plus. Count your blessings when you have a property management team that takes ownership. So, are there any other questions?
We do have one more. Michigan has a question.
Okay.
Quickly before the time going on. Sorry for because I come up late actually. Good morning actually. I want to quickly ask just one question. What is the difference between broker and investor? And they are both need a license, or which particular one need a license? Do you understand my question?
No,
The difference between broker and investor and which one needs a license?
The broker needs a license.
Okay. Then,
as an investor, you can be a passive investor and not need a license. That now I'm speaking specifically to multifamily, to the real estate. I'm not speaking about any other investments. So,
okay.
And any of us can be investors in a property.
yeah,
Not
you don't
all
need a
of us.
license for that.
You know, you need either a skill to find a property or raise capital, for example, or you need financial backing, some funds to invest. But
Right.
broker, actually can help sell or buy a property. They're kind of the middle people between the acquisition team and the seller.
Okay.
All right. Do we have time for one more question, Cecilia?
Yeah.
Okay.
Absolutely.
Raul has one question, and then you gotta wrap.
Hi, Cecilia. Thank you so much for sharing your wisdom with us.
You're
So
welcome.
I have a question. Have you managed any mobile home parks, or is it mainly just apartments?
No mobile home parks. I have a pending contract on a RV park, but we are buying it from a family, and one of the family members is staying on to manage it. So no mobile home parks. I do have another partner who does mobile home parks. I'm just not the one. I understand my area of expertise.
Well,
Because
thank
I
you.
just wanted to ask, the difference, between your expenses as far as maintenance goes for a mobile home park versus a multifamily apartment.
Well, I can tell you that because in looking at the financials, it is less in the mobile home park because, well, let me back up. Based on how the mobile home park is set up will be dependent on the expense ratio. So, but typically they've been less. The expenses are lower than multifamily.
That's what I thought. Just kind of wanted to hear your expertise, your expert opinion on it.
Yes. Yeah.
So, Cecilia, would you put your contact information in the chat?
Yes.
Anyone that's on here that would like to be on our distribution list to get the emails about these calls, if you could put your email in the chat, we'll add you to the
Yes.
list happily.
Where is the chat right now? I've got 3 screens going on.
Oh,
I'm going to stop sharing.
Or if you tell me, I can type it for you.
I got it right here.
Okay.
There we go.
Well,
One thing for James. James, are you a member of the National Association of Realtors?
I am.
And now do you have a
do you have a local board?
I do.
sometimes you could ask them the information, you're looking to what you're looking to pursue, they can a lot of times provide the answers for you or to you. So, because I'm a realtor in my state also, so
Okay. Thank you.
you're welcome.
Well, this was fabulous. There was so much great information that was shared. Cecilia, thank you so much. I absolutely love this. And, I know there was a lot more slides. If you want to send me any attachments or things, and then
Okay,
we'll get it out to everybody as
I
well.
will do that. And then I was trying to put my LinkedIn in there, but I couldn't get it to
Oh, I
to
can,
copy and paste. So I'll send it to you, and you can just share it if anybody wants to. But I'm on LinkedIn, and again, my Instagram is I am Cecilia Cossio. So if you have any questions, y'all can reach out.
all right.
You.
Well, thank you
Thank
so
y'all.
much. As I said, we'll be loading this replay up on our YouTube channel in about a week's time, and I'll share it with you, of course.
Sounds good. Thank you for having me, and thank you everyone who joined us. I'm grateful that you guys were able to be on and share my information with you guys. So y'all have a great day.
Thank
Thank
you.
you very
You.
much. Excellent
Bye bye.
information.
Thank you.
Thank you.
Good day, everyone. Bye-bye.
Thank you, Donna.
Thank you.
Bye, Lou.